In the complex world of coffee trading, managing prices, market news, and risk factors can be a daunting task. But what if there was a solution that could simplify your coffee trading journey? Welcome to BEANBOOK, your ultimate companion in the world of coffee trading. BEANBOOK comprises of 3 modules. Let's explore them one by one. But before we dive into the details, let's learn how easy it is to access BEANBOOK. Your login credentials will be sent to your email. In your browser search, type in beanbook.com. Log in with your email and password, and your account is ready to use. The opening screen of BEANBOOK is the home page where we provide a snapshot of your business. The first page displays monthly sales quantity versus monthly sales values, offering insights into your monthly sales trends. The second graph shows monthly average ICE price, both Robusta and Arabica beans, easily adding in coffee price analysis. The 2 cards on the top summarize year-to-date sales done by your organization and year-to-date sales income generated. The third graph offers an overview to the year-to-date sales delivered to top customers. This is crucial for customer relationship management and business management. Lastly, the pie chart illustrates the share of sales grade, helping us understand the situation of grades traded. This dashboard is automated based on the content the user enters in the transaction module and keeps decision makers with vital data for informed choices in our business operations. The first module of BEANBOOK is the market module. Market module is your one-stop destination for all coffee market related information, be it price, production statistics, weather forecast, news. We have it all here. Now, let's deep dive into the market module. Market module has 3 sub-modules: price, news, and production. In the price screen, you will find real-time and comprehensive price information for Arabica and Robusta coffee. This includes daily prices, 1-day change, and 15-day change prices for futures, export prices, farm gate prices, and exchange rates. Futures prices are sourced from ICE. Export prices and farm gate prices are extracted from UCDA. Future prices for 6 contracts traded on ICE can be seen at a time, and the prices are updated twice a day. Time of updation is displayed at the bottom of the futures price table. You can click on the graphs to see the price trends from 2010 of near month, mid-month, and farm month contracts. Similarly, the daily prices and of various export grades and local grades can also be seen in the table, and the price trends from June 2023 can be seen by clicking on the graph button. You can visualize daily exchange rates instantly for dollar to Brazilian real and dollar to Ugandan shillings as well. And for those with fair trade can view fair trade prices. They are also displayed at the bottom. If you need to keep a record of price table, you can download the prices with a simple click, and the file will be downloaded in an Excel format. The scroll button allows you to navigate the pages with ease. To zoom into a small area of graph to visualize the daily prices, you can select a small area within the graph and see the daily prices. To switch between Arabica and Robusta prices, click the toggle button on the top right hand corner. Moving on to the news screen. News screen is a centralized hub for global coffee news. BEANBOOK offers both weekly and monthly news updates about coffee production price, forecast, and BEANBOOK also has latest reports, etc., from multiple sources like USDA, UCDA, bar charts, Rabobank ICO, etc. Click on the interesting news article to read or download it for later reference. We have also enabled announcements from ADC to alert the cooperatives. On the right-hand side, Twitter is also enabled so that you never miss any coffee-related tweets. Lastly, let's explore the production screen. This invaluable tool provides weather forecasts for all districts of Uganda, helping you manage your coffee crops and mitigate risks. You will have access to 15-day temperature and rainfall forecasts, plus it offers a harvesting calendar for both Arabica and Robusta coffee, making the user understand the global harvesting season and coordinate with suppliers and buyers. Now let's dive into the transaction module. This module offers a set of essential functionalities. It streamlines the complex process of analyzing contract profitability, eliminating the need for cumbersome manual calculations and spreadsheet management. Additionally, it enables you to compare multiple reference prices for sales. Now, let's explore the structure of Module 2. Within Module 2, you will find 3 key sections. First, we have the Cost Master, where you can store all your cost-related data, making it accessible and available. Then, the Enter New button is where you can enter new contract details. Lastly, there's a Transaction Depository, which provides an overview of the input transaction. To get started with the transaction, the first step is setting up your Cost Master. BEANBOOK categorizes daily costs under various heads. If we happen to miss any cost, you can simply add them under the category Other category. Remember, all values should be entered at the UGX backlog. Now let's walk through a sample Cost Master together using sample figures. Factory level costs include offloading and weighing 15. Hulling, grading, all processing costs 15. Loading to warehouse 20. Local transport 20. Fuel and maintenance 100 and others to be 0. Warehouse costing include offloading 20. Hand sorting 100, packaging cost 100, stacking costs 200, and others to be 20. Export costs include transport FOB Mombasa 50, loading container 100, inspection by UCDA 10, export clearance and agent fees 100, sampling and courier 50, insurance, warehouse plus shipping 150, quality control 100, PSI services 200, and others to be 15. Once all the data is entered, click on Calculate Variable Cost to calculate variable cost. The variable cost we have got here is 1385 UGX per kg. This figure will be used in calculating contribution margin, so ensure you enter the right values. Do not forget to input all fixed costs and estimated sales. Let me enter fixed cost as 132,000,000. This figure is in Ugandan shillings. And estimated sales as 20,000 kilograms. These figures can be derived from your budget and they play a pivotal role in break-even and net profit calculations. Now click Save to store this data in the Cost Master. All substantial calculations will be based on these inputs. With our Cost Master now set up, let's move on to entering a sample contract. Click New to begin entering contract details. The pop-up that appears here is displaying the variable costs calculated from the cost master. If it looks accurate, click Continue. If you click Reset, you will edit your cost master values and resave it. As we proceed with entering contract details, we will go screen by screen and enter contract details. For the purpose of this demo, we will be doing Arabica contract. We have to enter 3 categories of details. First, we enter contract details. Let's start entering it. Let's first select the sales type. We have 2 options, export or local. In this case, I'm going to select export. And next, we select the coffee type. In this case, I'm going to be selecting Arabica. Based on the terms and conditions, select the type of contract, whether it is fixed or open. Enter the buyer's name as by the contract, and in this case, I'm entering Nestle. Enter the contract number, and in this case, I am entering Nestle 004. Enter the contract date and click on the calendar button and select the date. Enter the delivery date, click on the calendar button and select the date 10/1/2024. From the drop-down menu, select the grade of the coffee requested in the contract, in this case, Bugisu AA. Based on the contract certification you hold and as per the contract, you select the certification. If you don't have any, you may choose the option of not certified. For this contract, I'll select Rainforest and Fair Trade Natural. The second category is information related to the sales price. In this next screen, we have to enter the offer price and any other related information. Within BEANBOOK, you need not to enter the units anywhere, as units are stored in the system and all conversations will be taken care of by BEANBOOK. Enter the offer price in cents per pound, since this being an Arabica contract, 160 cents. Enter the quality differential per unit as per offer, 20 cents or pound. Please ensure you enter the current values. Since I had chosen Rainforest certification, I enter in the first premium 112 cents per pound. Enter the quantity in kg. If your contract is in other units, please ensure you make the relevant calculations and enter quantity in kg. In this case, I am entering 40,000 kilograms. Now moving to the third category, we will input purchase related information. For fulfilling the contract, you may choose the purchase grade. For fulfilling this contract, I'm selecting the Arabica parchment. Next, enter the indicative purchase price for a kilo of the purchase grade. I'm entering 9,500 UGX per kg. Now enter the speculated outturn. For this grade, I'm entering 90%. Lastly, enter the indicative income you may generate from selling under grades that you generate while processing the purchased coffee. Enter the amount in lump sum for 0000 and 000 UGX. Now click Continue to view the margin analytics. The margin analytics screen has 3 sets of data. First being margin analytics on the left side, followed by suggested purchase price on the right and price comparison bar chart on the bottom right. Margin analytics has outputs from parameters you have entered as well as some calculated outputs. For example, parameters based on all inputs include quality differential, variable cost, etc. Margin analytics has outputs from parameters you have entered as well as some calculated outputs. For example, parameters based on all outputs include quality differential cost, etc. And calculated outputs include final price, contribution, etc. Final price, which is calculated by adding offer price with quality differential and comparing it with fair trade price and picking the highest amongst them. Contribution is calculated by subtracting total variable cost and purchase price after adjusting outturn from final price. Final price UGX is the sum of final price converted in UGX and income from other grades at kilogram level. On the right hand side, you will find a suggested purchase price, which is generated according to the contribution margin. By adjusting the slider, you can get insights into the regrade document price to achieve a specific target profit. If you wish to modify the contribution margin, simply move the slider and the corresponding price will be updated accordingly. The bar chart on the right serves the purpose of comparing the final price in UGX with the break-even price, UCDA price, and ICE future price. You can hover over the graph to view additional details about the price value, grades, and relevant features in the contract month. You can save transactions by clicking Submit All or cancel them if you don't want to proceed further. Submitted transactions from this will go in the depository as drafts. Once your contract is finalized, the pencil button on the right allows the user to edit the transaction. In the pop-up screen, you can scroll down and from the status option, make the status of the contract from draft to active and click on Save button to save it. The pencil button also allows the user to edit the offer price, delivery date, income from other grades of active contract. The final price in the corresponding outputs also allows to be updated within the system. Within the system, you can make the status to delivered by changing the status from active to delivered by clicking on the edit button. This helps the user enter backdated contracts. In order to view the output and graphs generated from the margin analytics, double-click on the contract for which you want to see the same. Using the sorting option, you can organize your contract based on the delivery date, contract date, or offered price, etc. The depository can be downloaded in CSV format with the margin analytics all presented by clicking on the download button. You can also tailor the space by showing or hiding the columns. Now, let's shift our focus to the third module, risk. This module is divided into two essential sections: monitoring contracts and position analysis. Monitoring contracts serves as an invaluable training module within our tool, enabling you to simulate potential outcomes when engaging in hedging activities. All active and open contracts from the transaction module are seamlessly transferred and monitored within this section. Now, let's delve into some key highlights of the monitoring contracts section. Firstly, we've introduced the red highlight on the current contract value. If the current contract value is lower than the break-even value, the highlight is displayed so as to make the user aware of this contract and renegotiate the contract if needed. BEANBOOK has also alert for delivery date. Delivery date highlight functionality will alert the user on the upcoming delivery 1 month before the actual delivery date. Additionally, we've implemented pricing fixing alert, which is highlighted in red in order to alert the user about the upcoming contract for which price has to be fixed, and the alert occurs 30 days prior to the delivery date. Using the filter option on the top right, you can filter contracts for Arabica and Robusta, allowing you to focus solely on the commodities that are most relevant to your operations. To delve deeper into a specific contract, you can click on the Details tab to access all the details associated with that contract. Now, let's take a closer look at the simulation feature. This functionality offers you the ability to understand the net profit or loss you would have incurred if you had chosen to hedge. Simulations are available for contracts exceeding specific quantities in accordance with ICE norms. For Robusta, the minimum hedgeable quantity is more than 10 tons. While for Arabica, it is more than 37,500 pounds. Click on the simulation button to gain a deeper understanding of the potential outcomes of your hedging decisions. During the simulation process, we calculate the historical volatility of the past 3 years. This historical volatility is used to generate simulated prices for the future. However, we understand that market conditions can vary. If you disagree with our simulated price, you have the flexibility to increase or decrease it by moving the slider. All subsequent fields will reflect changes based on the simulated price. The output generated can be classified into 3 categories. The first category illustrates what the spot prices in the futures market would look like if they were trending downward and you had opted to hedge. This provides crucial insights into your hedging strategy. The second category focuses on calculating the cost of hedging. To do this, you need to input the ongoing bank interest rate. Let me enter an interest rate of 15% to get the cost of hedging. The third category presents the potential benefits or losses incurred by engaging in hedging for the minimum contract size. The third category presents the potential benefits or losses incurred by engaging in hedging for the minimum contract size. Positive value in this field indicates the potential gain through hedging on a minimum hedgeable quantity, while a negative value suggests a loss. It is an essential metric to assess the overall impact of your hedging decisions. Once you've conducted your simulation and gathered insights into your hedging strategy, you can easily download the simulation output by clicking on the download button. This allows you to have a tangible record of your analysis for further review or sharing. The second section of the risk module is position analysis. Position analysis tool helps to understand the balance between forward sales and purchases on a month-to-month basis. This information guides users into determining how much they should hedge through futures contracts or secure via physical purchases. All active contracts, whether they are local, export, open, or fixed, entered in transaction, will eventually move into the position analysis module. Within the position analysis module, we showcase all active contracts, and it is not limited to just one type of coffee. We've enabled filtering to view both Arabica and Robusta separately. This ensures that user has a comprehensive view of their coffee contracts. In Tool, we assume that purchase of clean coffee is done 7 days before the delivery date. Total sales, this is the sum of spot sales and spot sales forward, representing the total purchase made within the immediate time frame. Total forward contract sales, the sum of forward contracts, fixed and forward contracts open, giving you a complete view of your future sales commitments. Total physical coffee held stocks. This represents the stock from the previous month plus the purchase of clean coffee minus the total sales. It is essential for understanding how much coffee you have in hand. Net risk position. It is the difference between total physical coffee held and forward contracts expressed in metric tons. A negative value indicates that the cooperative has more forward contracts to deliver as an obligation and holds less stock, which can be a significant risk factor. Real-time position analysis status can also be downloaded by clicking on the download button. Position analysis is a critical tool for users to manage their coffee contracts effectively, helping them make informed decisions and mitigate risks in the ever-changing coffee market. The last section of the Bean Book is glossary. Within the Bean Book, we have also built in a glossary that provides definitions and explanations for key terms and concepts relevant to the entire system. You can find glossary within the left panel of the tool. Simply click on the glossary tab to explore its contents. Glossary section is organized into sections and subsections, aligning with the different modules of the tool. Each section is clickable and scrollable, allowing you to dive deeper into specific areas as needed. Also, in case you have questions or doubts or issues, or you forgot your login ID or password, you may email us at the email address given at the lower bottom of the screen, info@agtull.com. Say goodbye to juggling between websites and spreadsheets. With BeanBook, you will have all the information you need in one place. Join us today and revolutionize your coffee trading journey with BeanBook.